So a quick recap of what we have seen with markets this week. Certainly we do recall at the start of this week, the attention had all been focused on China's GDP numbers. And Q2 GDP, which came in at 6.9% year-on-year, had surprised on the upside and helped regional markets in Asia on a higher leg up. And of course, this had been supported by the higher crude oil prices as well. So the 4.7 million drawdown for US crude inventories really did capture the speculative market's attention, and that saw WTI futures to surge above $47 per barrel following the release, and was last seen just trading around that level into Friday morning here in Asia. And of course, into the end of this week, it had all been about monetary policy. So we've seen a lot of this move being captured by the currency market. Euro-US dollar has surged to touch a near 2-year high into the end of this week, following the announcement from the ECB President Mario Draghi in his second conference, where the ECB could be considering bond purchase reduction plans in their upcoming September meeting. And for the market, that has been seen as an overtly hawkish signal, despite earlier concerns that they may go on the softer side after seeing the euro surge. So for the upcoming week, what are some of these items that we are going to look out for? Certainly for the whole suite of events, you can look out to the IG economic calendar on the IG website, but I'm just going to highlight a few items. So at the start of this week, we're not going to see the attention deviate too far from Europe, particularly with the market PMI manufacturing, the preliminary July figures being out on Monday. So previously we have had expectations that the gap between PMI numbers in Europe and the US could actually moderate slightly, but we have seen instead in June's release that the gap actually further widened. So once again, the market is expecting that to be the case, and should we actually see that happening, which the market currently has penciled in their median consensus, we could be seeing the Euro-US dollar pair actually reverse some of its recent strength. The next item, of course, will be again back to the Fed. So this week we have had quite a bit of breather with regards to the Fed, especially after last week, where we have seen Federal Reserve Chair Janet Yellen went on the dovish end with regards to the future interest rate hike path. So the upcoming Fed FOMC meeting is likely to capture the market's attention once again. But as things stand at this current moment, I do find the buyers remain on the downside for the US dollar index itself, which has actually dipped to the lowest level since August 2016, below 94.50. That was due to the euro strength, obviously, this week. So for the upcoming week, I do think that the Fed FOMC could actually remain on the more dovish end, and even so with the GDP numbers that's expected at the end of this week at about 2.5% quarter-on-quarter, it may not actually significantly help the US dollar up. So look out for that key piece of items. And for equity markets, meanwhile, it's all about earnings and more earnings. So this week we have seen quite positive numbers coming from the tech side, with Netflix and Microsoft being some of the ones reigniting interest in the tech sector. But the upcoming week is going to bring in a lot more, including Alphabet, with the parent company for Google, Amazon, and also Facebook being some of the FANGs that's going to announce their earnings. And I think the market is going to keep a close watch of these items. And moving really to the Asian Pacific region, is about CPI numbers, especially with Japan and also Australia. Australia's Q2 numbers being the report. And especially with what we've seen with Aussie strength lately, I do think that the CPI numbers is going to be quite a key one, and the miss there could really deal quite a bit of a blow to the Aussie dollar as well.